Hey guys, Tony here, back with the latest news on the AMC $250 million equity raise and another look at this very top secret spreadsheet that we have to help calculate when this dilution is going to be done. Hang on one second, let me log into the folder and we'll pull this file up. All right, we're in. Give me 1 second to remember where I stuffed this file, the spreadsheet. Oh, here we go. All right, let's open up this spreadsheet and see where we're at on the dilution. Now, I know at least a couple of you appreciate our efforts to do some due diligence, to do some math, and talk about what could be going on with the dilution. In fact, we were the ones that broke the news here on YouTube just a couple days ago that the stock would bottom out this week at 293. Which it did yesterday. It hit 293 exactly. We also broke the news that the maximum shares allotted for this dilution event was 83.33 million. And some people had not done the work to go figure that out. If you did, kudos to you for doing the real DD. And I always thought that in the investing community, sharing ideas, opinions, math, spreadsheets, to try and have some discussion with folks about what could be going on would be appreciated. So imagine my surprise when I hear that people are immediately calling it FUD, conspiracy theories, obviously pushing some agenda. Come on, guys, we're better than that. We're all here to share information and have discussion. And if you're not, then you're leading some sort of cult and you don't want your people to have access to information. And we don't do that Kool-Aid bullshit over here. We have full, open, and honest discussion. Now let's talk about the spreadsheet. In our little think tank, we're always trying to think like a CEO, not like what a retail investor might want. And I think, this is my opinion, not financial advice. You can take it or leave it, but we're gonna have the damn discussion. I think that what the CEO and the CFO want is to have this dilution, this cash raise done before the earnings call in early May, because that is what makes sense, to replenish the cash on the balance sheet so that they can talk about that positively on the earnings call. That's a positive. That is a win. Why me sharing my opinion about what I think the CEO is trying to do would be trying to drive some sort of FUD narrative sounds kind of kooky to me. I don't know why someone would say that. This is one of many possible scenarios. Maybe they are going to drag it out for a year. I don't really care either way. I'm trying to think like they think. So let's talk about the two scenarios that we have laid out here. Scenario one was the first idea that I had, similar to what they did in the November 2023 dilution event, where it took 30 days and the volume in that 30-day period was 480 million shares. And they sold 48 million shares to complete the $250 million equity offering back in November. And so I used the 10% rule to create scenario number one and try and estimate how long it would take them to do the dilution. But then we also realized that if they wanted to get it done before, say, May 8th, when approximately the earnings call is going to be, that probably was not going to work. They're going to run out of days and they're not going to be able to raise enough money. If my scenario one were the case, they're only about $50 million in. And with the volume dropping off like it did today, 16.6 million shares, assuming that that is the average volume for the rest of the month, they're not going to get it done. So we know there's going to be some volume variability. We know that there's going to be some price variability too. But I'm just kind of laying out a rule of averages here to make a best guess. I'm not saying that this is exactly what's going to happen. I'm trying to figure it out and make my best plan for what I'm going to do based on my own due diligence. You can take it or leave it. But since we realized that scenario one had some inherent problems, Mediocre Trader had the other idea that, hey, Tony, why don't you model assuming that they front loaded more shares on day one and day two, Thursday and Monday, when the volume was much higher? Why don't you try, say, 50% of the volume on those days, and a bonus, the price was higher on those days. So it could be that they raised a little bit of shares at more than the $3 average we've been trading at for the past several days. So that is scenario number two. We know that the average price on March 28th was around 370. The average price on April 1st was around 330. And we said, all right, let's assume that AMC sold half of that volume into the market. Then Let's try and figure out how long is it going to take. And if we just use very simple assumptions for the rest of this month that it models after today, we get a scenario where they can easily finish this dilution by the end of April. In scenario 2, we just assume a very modest volume for the rest of this month, averaging between 14 and 16 million shares. And for each trading day, whatever the volume is, AMC will be selling about 10% of that volume as new shares for their equity raise. In that scenario now, by April 29th, AMC will be able to raise that full $250 million using the front-loading assumption that they heavily sold at a slightly higher price on 328 and 41. Does that mean that the price is going to stay at $3? I can't tell you that for sure, right? There's a lot of market dynamics that happen over the next month, and there's going to be some volatility in the price of the stock. But if it stays over $3 and the volume stays relatively the same to what it was, they can easily get this equity raise done before the end of the month and have something good to talk about in the earnings call in early May. Since I know that there's going to be variability in the price, I might update this spreadsheet every day, depending on changing factors. But this gives me a working model to plan my trading strategy of where I want to go in and try and capture the bottom, because I am rebuying now. I have already done some buys below $3, and I am selling cash secured puts this week to generate some immediate income, some option premium, and to identify a point at which I'd be willing to buy the shares. If it drops below my strike price, then I will allow those options to be exercised. I will take the shares, and I'll already have an automatic discount built into my cost basis for those shares, because I will offset what I pay for the shares with the premium that I earned. This is one way you can get an entry into a stock. Look, if you're saying to yourself, I'd be willing to buy AMC if it drops below $3, then you could think about, not financial advice, you could think about selling a cash secured put with a $3 strike. And if it goes below $3 by the end of the week, you're going to pay $3 for those 100 shares. But you can subtract the money you earned as the put premium from your basis. So that is what we call the wheel strategy. At any rate, I hope you found this helpful. Let me know down in the comments if you are buying right now, if you bought any this week, or if you are waiting. I know there are some people out there with crazy low price targets. I don't know if we will get down into the low prices that some people are forecasting or not. We're going to take it day by day, week by week. Thank you for watching. I am Tony Denaro, and I will see ya on the next video.
Oh, yeah.